Billions of riyals are flowing into Saudi real estate right now, as the kingdom is witnessing one of the largest development cycles in the world. Mega and giga projects are expanding, and opportunities seem to be everywhere. But here is the reality most people don't see. A project can look profitable on paper and still fail completely. In fact, some of the biggest real estate losses happen in strong markets, not weak ones. Many developers still think simply, if the Saudi market is growing, everything will sell or lease. But in today's environment, growth alone is no longer enough. Execution, timing, and risk management have become real differentiators. In this video, I'll break down the biggest risks that can still destroy a project in Saudi Arabia even when demand appears strong. Let's start with one of the most dangerous risks: misreading demand. Yes, demand in Saudi Arabia is real, but this is no longer a market where you can build just anything and expect it to sell or lease. Today, buyers and tenants are becoming more selective, more price sensitive, and more focused on quality and location. We are already seeing signs of this in certain residential segments, as an example, where supply is increasing faster than actual absorption. For instance, Riyadh continues to experience strong demand overall, yet some projects in secondary locations are facing slower sales and higher inventory periods. This creates a dangerous situation. Developers build based on market momentum instead of actual end-user demand. The result? A project may look great at launch, but later sales begin to slow, making it difficult to sustain performance. On the other side of demand comes supply, along with market timing challenge. In fast-growing markets, many developers launch projects at the same time, but demand does not always absorb supply evenly. We're already seeing large residential, mixed-use, and commercial pipelines, major office expansion, and increasing hospitality supply across key cities. Riyadh alone is expected to deliver tens of thousands of square meters over the next few years. And no, this isn't about the market getting weaker. It means competition will only intensify. And that's exactly where the real selection begins. Because projects without strong positioning, differentiated products, proper phasing, will struggle much more in the next cycle. The third major risk is financing pressure. And this is where even profitable projects can face a real collapse. Over the past few years, financing costs increased significantly as interest rates moved higher globally. In real estate development, leverage can quickly become dangerous. Here's a simple example. A 500 million riyals project financed with 70% debt, that's 350 million riyals of borrowed money that needs to be serviced regardless of whether sales are coming in on time or not. Increase in financing cost, coupled with a small delay in construction and/or sales, can create massive pressure on cash flow. This becomes even more critical in projects relying heavily on off-plan sales, aggressive pricing assumptions, or short-term refinancing. And this isn't just theory. We've already seen real cases globally and regionally where projects looked profitable initially but became financially stressed because debt costs rose faster than expected. In today's market, liquidity and cash flow management are just as important as land value, because without control, financial pressure can escalate fast. In the previous video, I broke down the 4 biggest risks developers face in today's market, so make sure to watch that next if you want the full picture. But here I want to focus on a risk that many people still underestimate: execution. Because in real estate development, project failure often destroys more value than market decline. Saudi Arabia currently has over $1 trillion worth of projects planned or under development, creating enormous pressure on contractors, materials, labor, and infrastructure delivery. That translates to construction cost inflation, contractor delays, and supply chain pressure that can significantly impact project economics. For example, a project originally budgeted at 300 million riyals can easily experience cost overruns of 10% to 20%. That's an additional 30 to 60 million riyals in unexpected cost. And if the margins were already tight, profitability could disappear very quickly. But one of the least discussed risks begins after construction is completed, and it's a critical one because many projects focus heavily on design, marketing, launch sales, but underestimate operations, community and public realm management, maintenance, and long-term tenant experience. Today, this is critical because buyers and tenants are comparing projects based on livability, service quality, and long-term value retention. We've seen globally and increasingly in the GCC that poorly managed communities lose attractiveness very quickly, even if the original development was successful. So what defines strong developers in today's market? They focus on phased development, flexible product strategies, disciplined leverage, and data-driven planning. They are also prioritizing recurring income, operational quality, and long-term asset performance. In other words, the market is rewarding discipline, not speed. Saudi Arabia remains one of the most exciting real estate markets in the world, with truly enormous opportunities still ahead. But the rules have already changed, and the next phase of growth will not belong to the fastest developers or the most aggressive projects. It will belong to the most disciplined, the most adaptable, and the most precise. Because in today's market, understanding risk is just becoming as important as identifying opportunity. In the next video, I'll move beyond individual projects and look at the bigger picture behind Saudi Arabia's giga projects. So I will break down where the real opportunities actually lie, which sectors and locations are likely to benefit the most, and how these massive developments are reshaping land values, infrastructure, tourism, and long-term investment demand across the kingdom. Because while many people focus on the headlines, the real value is often created in the ecosystems surrounding these projects, not just the projects themselves. So if you want to follow this market in real time, subscribe and stay connected. And if this gave you a clearer understanding of how projects really succeed or fail, share it with someone involved in real estate. If you're working on a specific project or investment decision, you can also reach out directly at landcapital.sa@gmail.com for a focused discussion. I'll see you in the next one.